Welcome, traders, to After Hours at TradersPost for Friday, November 14th, 2025. I'm one of your hosts, Tom Hartman, marketing manager here at TradersPost, joined as ever by Peter, Exit Liquidity, Hartman, to break down the market madness. After Hours is your go-to live stream focused on macro trends for retail traders. That's dollar, equity, and policy for the uninitiated. After Hours is brought to you today by Blue Sky, the best-in-class prop firm that offers same-day activation, daily payouts, and no max restrictions. But we'll tell you more about them later. For now, let's turn to what we always look at first, which is the dollar. Peter, I thought we would have a great week because here on November 5th, the dollar peaked in its little uptrend over here. We've been having this little uptrend on the dollar since Mr. Powell gave us reassurance that he was going to be cutting interest rates on September 17th, the September Fed, and the dollar's been up and to the right since. Okay, fine. We got back up to the top of the range, which was right over here, and we got a pullback from November 5th. So I've been thinking to myself, up, up, and away, right?
Mm-hmm.
Financial conditions are easing. Nothing to worry about. Turns out wrong. Turns out that our indicator here that switched to this green area here to bullish trend is just that financial conditions are worsening throughout the euro-dollar system. To what degree, we don't yet know, but we're seeing the effects of it within the markets. Now, it's fun today.
Before you go any further, shout out to TJ in the chat. He says, we're back. Yeah, we are. Yeah, we are. Tom's back from New York, back on After Hours. Very happy to be here. Thanks for watching. So Tom, wait, hang on. Are you saying that before we thought that things were getting better, but now you're saying things are getting worse?
Well, we're talking about the economy and then markets, right? It's two different things here.
I didn't say good or bad this time.
Right. So what's getting worse here is financial conditions within the financial markets. But it's being exacerbated because of what's going on in the economy and in the political sphere. So there's a number of things that are going on over here, right? When we're dealing with any sort of predictions as to what to think for now and the future for markets, we're thinking about growth, inflation, and policy as a general rule, right? Growth for the economy. Are we more productive now? And, either outpacing our debt, the interest on our debt, or at least climbing into it. Inflation, how much money has been made, either through printing, through credit, whatever it is, and how it's circulating through the system. And third, policy. What's going on in fiscal policy from the government? What are the policies that they're enacting? Because the bigger and more expensive their policies are, the more the debt needs to be monetized in order to pay for it. And what's going on in monetary policy, which is liquidity being added to the system in order to keep unemployment low and to keep prices stable. So when we see the dollar rise the way that it's rising steadily, it's just this consistent problem within the system that says, hey, there's just not enough dollars flowing around. And when there's not enough dollars flowing around, the dollar goes up because people have to buy the dollars because they're absolutely going to need it at some point. They can risk it in risk assets.
Why is it that sometimes you... Sorry, go ahead. Why is it that sometimes...
Sorry, no, go ahead.
I was just wondering, why is it... It's so stupid. Why is it sometimes you check the DXY and sometimes it's US dollar index futures? Like, what's the difference there?
Well, I never really look at the DXY. The DXY is that's just the index. If you just look at the DXY, what'll happen is that my indicators won't work because you'll only have price information. You won't have volume information. So it gives you pretty much the same sort of look as the DXY, but on the DXY I get volume, and so that's where my beautiful indicators can work. Because I don't care only so much what price is doing. I care about the conviction behind that price.
So what should I look at, DXY or US dollar index
it's pretty
futures?
Much the same thing. If I were to overlay the chart here for DX futures, new price scale, it's basically the same thing. See the blue line behind?
Mm-hmm.
So it's basically the same thing.
All right, gotcha.
It's just that the number will be different. So what 99.173 on the DXY is, it's 99.065 on the futures.
Mm-hmm.
Okay. So that's what we're looking at. Now, the problem is, normally with this sort of thing, you're looking for a reason for why this is happening. Why would why would financial conditions be tightening? Well, we know, one, there was a problem with the shutdown, right? So with the shutdown, if we take a look at the Treasury General Account, if I'm not mistaken, let's just look here. The Treasury General Account was just rising. So we had this rise in the amount of money being stored in the checking account at the Fed. That's the checking account of the government. And it's up to right now 953 million. So basically $1 trillion worth of money that's not flown around in the economy, that's stuck within the checking account at the government. Because of the shutdown.
Moly.
Yeah. So we are going to be expecting that to be released at some point. Now, I thought part of that was, well, because people had uncertainty as to when the shutdown would end, we had to pull back in liquidity. And I imagine that I would have anticipated that with that being resolved, we'd all expect this money to be flown back in and money would flow into the markets. Except that there's two other issues that happened at the same time. One, and let me pull up a post here so you can see. Where is it? One here, the probability of a Fed rate cut in December, as we mentioned last week, got Nancy Kerrigan. All right, we went from a 70% odds of the Fed cutting rates down to a 42%. Let's go ahead and read here this post from Jim Bianco from Bianco Research, who says, what is the cause of the K-shaped economy? That's where those who have are doing well and those who have not doing worse. The short answer is inflation or affordability and not jobs. The University of Michigan Sentiment Survey in blue was 50.3, the second lowest reading ever, behind only June 2022. This survey started in 1952, and consumer sentiment is currently lower than during the 1962 Cuban Missile Crisis, the 1969 recession and protests, the 1970s inflation, the 1987 crash, the 1998 financial crisis, September 11th, the Great Recession in 2008, and COVID. So the reading is lower than that. This is happening when the unemployment rate is 4.3. Remember, 4.1 was the lowest unemployment rate we'd seen and was there for forever. Well below the 73-year average of 5.7. And the stock market red is at new all-time high after 2 consecutive 20% annual gains. So why are consumers so negative? The simple answer is inflation or affordability, as it is now being called. From the cumulative rise in CPI over the last 5 years, prices are now 26% higher to record home and beef prices. Consumers feel everything is too expensive and are upset about it. Add to this that average hourly earnings have increased by 21% over the last 5 years. That's less than the 26% increase in CPI, and they're also falling further behind. So even as you're making more money, it feels like you have less money because you have less money. Your money's buying less. This is something that I've noticed myself. You notice this too. Mm-hmm. The amount of money that you make now, if we had made that 10 years ago, we would have been upper middle class. And now it doesn't feel that way at all. So it says the market is concluding that affordability or inflation is a bigger problem than jobs. The probability that the Fed will cut rates at its December 10th meeting started the week at 70%. It is currently at 42% and still declining. What? Right? Because the Fed, right, because affordability here as a replacement for the term inflation here, it makes a lot of sense for people. Because when you say inflation, people don't even understand what it means. Affordability is here speaking about a type of inflation that's affecting the regular consumer. And we're going to see that reflected throughout the economy as the consumer spends less. It's a consumer-based economy. So it makes sense that the Fed might not be able to cut rates into that type of slowdown, into that type of thing that might cause inflation to pick back up. Right? If they're easing in order to cause more liquidity to come back into the markets, that could cause prices to then, where it's stabilized now continue to rise afterwards. So that's going to be hard. Now, how much of that is political? How much of that is because of the data that the Fed is making the decision? I don't know. And that's one of the reasons why I'm scratching my head at what's going on with the dollar right now. I would have expected the dollar to plummet, but it hasn't. All right. Well, taking a look at equities, let's start with the Nasdaq. So we have the Nasdaq that's down. What is it? 6% from high, 4% at the close today, 6%, almost 7% on the low. This, as Mike from in Price Action Live calls it, is just a regular correction. Nothing to write home about. No bear market territory, right? The kerfuffle we had back in the spring with the Trump tariff, what do they call it, the tariff tantrum, that was 26% down in stock market. They were calling a bear market potentially after that. This is nothing. It's a baby move. So there's some talk that this is just, hey, there was uncertainty leading into October. We don't know if this uncertainty is going to continue. Let's start profit taking. We're up for the year. Let's not give back a bunch of gains and just start selling off. So maybe that's what's happening, but we don't know yet. I would love to actually let's take a look at the other equities first. So similar is S&P, which is also down a similar amount. So nothing crazy to write home about. I'm actually from here bullish. Until I see more downside move, I'd actually be bullish from here. Gold pulled back quite a bit. We got this lower high over here. Not for nothing, Peter. It went right up to my indicator line, my daily VWAP level here, and then reversed. Who could have seen that coming?
Oh, stop.
And pull back. But with the dollar falling over the last little period of time, you would expect the gold to rise, and it didn't really rise. And it's actually pulled back here. So does that mean that deflation is coming and that we're going to see equity prices fall, gold, silver fall, even as the dollar is falling? Who knows? We don't know yet. I'm not a fortune teller, Peter. I can only tell you what is, and sometimes what will be.
Well, that sounds like a fortune teller,
Peter.
Unless you think there are people out there who can see the future.
Don't praise my name, please. Just
nobody's praising your name. Nobody cares. What's your name again?
Okay, I'm not going to take any guff from someone who's just like the Unabomber. Okay.
Hey, it's the red wedding over here. I'm looking at 95,000 Bitcoin. All right, everything is crazy. The Fed's not going to be cutting. All right, what am I supposed to do? Look like Christmas over here? It ain't Christmas over here. I'm out here buying a Blackstone griddle, and I'm like, oh, should I spend the money on this thing? I shouldn't be having that conversation right now. Okay, I should be like, yes, spend. All right. It's not, should I buy a Blackstone griddle or should I feed my daughter? I shouldn't be making those decisions, all right? And I made the wrong one.
Griddle.
Sponsored by Blackstone. All right.
So I really like this interview on CNBC that happened earlier today. I thought Ali McCarty here really captured like what's going on across the different assets, what's happening within the economy from her perspective in Wall Street. So let's go ahead and listen to a few minutes of this. Oh, wrong tab. 1 second. Darn. Give me 1 second here, Peter. I'm in the wrong place.
I will give you 1 second by reminding everyone that After Hours is not the only show that takes place on this channel. We've got Price Action Live that takes place Tuesday to Friday, 9:30 a.m. You can see Tom and Mike trade the open using TradersPost. Really cool show, fun show, special guests that are on there on the regular. Highly recommend you go and check it out. There's also Office Hours that's coming up this Tuesday. That's going to be at 3 p.m. Eastern Standard Time. You can ask questions. You can find out about TradersPost. And then we also have Blueprint that just happened yesterday. And I won't even tell you how good that episode was. You should just go and check it out. Tom, you ready?
Yeah.
All right, let's do it.
Joining us, Ali McCartney, Managing Director at UBS Private Wealth Management. Good morning.
Good morning.
Guess the these are some of your notes, but I guess everyone can feel that some of the enthusiasm for AI has dissipated in the last 2 weeks.
Sentiment is moving really quickly in this market. And as you can see from a trading perspective, it's largely moving along with the momentum stocks. The honest truth is that given where we are in valuations and given some of the lack of data and the opacity we see in the market, longest shutdown, there are a lot of reasons why we should have more volatility right now than we've had. So when you add the fundamentals, the lack of data, and then you put onto that what's happening in Fed speak, I think having some sort of breaks, especially after October year end for a lot of funds and asset managers, sort of puking stuff back into the market to start their year over again, makes a lot of sense to me.
Okay.
All right, so this is what we're just talking about, this idea that it's like, hey, we got uncertainty forward, we're already up, let's lock in some profits here and see what's going on. It sort of coincides with such a massive sell-off that happened in markets, and no one can really pinpoint to anything that like would be the cause of that, other than this uncertainty.
And Andrew mentioned NVIDIA, that could be important. But in terms of just the last reporting season, could you have asked for anything?
No, it was
better?
extraordinary. It was extraordinary, but from the same perspective, so are valuations. So I think that there's that push and pull, and the market, you mentioned NVIDIA, I think the expectation is that between the 5 of the 7 or 10, depending on how you look at the stocks that are pushing this market, I think, between that 2 weeks ago, those 5 reports, and NVIDIA, there is this myopic focus. If you look today, also, if you look this week at the volumes that we've seen, probably because of a little bit of the timing and also because of the holiday in the middle of the week, volumes are low. So I think this is just sort of a period of digestion. I'll tell you that as a former vol trader, I love it. I've been putting new money to work for the last 5 days in most markets that you can imagine.
So this, by the way, is what I like to hear. She's saying, okay, I'm saying all this, but I'm putting money to work. I'm seeing this as a dip to buy in a number of different assets, which they're going to be surprised to hear.
Whether it's gold, precious metals, whether it's AI, hyperscalers.
So you like
feeling good about it.
the safety zones, and you like the
Yeah.
risk-on areas too.
So coming into this year, largely because of concerns about recession and then sort of political erraticism, if that's a word, I certainly, and the waning dollar, there were a lot of themes that are also positive for the stock market, that are positive for assets like gold, palladium, you name it.
Okay, that's an interesting strategy, barbell strategy.
Yeah, so it has been more of a barbell than I have had in my life in portfolios, where instead of necessarily only having traditional fixed income on one side and equities on the other, there's been sort of more of a ballast of in my portfolios right now. Some of it is because of the market movement taking the relative percentage up. Gold up 65%, even with markets up, 10 to 15%.
Yeah,
it's the relative. But I have some portfolios that have between 5 and 10% of those 3 commodities right now.
So I find that to be fascinating. The idea is that normally if you're bullish equities, you're like mostly bullish equities, and you don't move into safe haven assets until you think there's a problem. But she goes, well, there are problems. We don't know what's going on politically. We don't know what's going on in tariffs or anything like that. So let's go ahead and buy the safety assets. But I'm going to buy the equities and the high risk assets. And you're like, wait, you're doing both? I understand. Are you worried that things are going to go down or go up? Well, chances are what she's talking about is she's talking about the hyperscalers, the AI names, the Mag 7. She's not looking for some mid-tier company. She's looking at the top cap stocks here. So you're like, well, buy performance and safety. And then she's also saying that some of that safety that she had there, the gold within the portfolio, well, that's just gold went up 65%. So it's going to take a larger percent of the portfolio. So, hey, I guess it was sort of a barbell strategy. I just had both in there. And I just love that sort of conversation about it, because usually if someone told you to buy some gold and at the same time buy NVIDIA, you'd be like, excuse me, what? What are we talking about here? What regime do you think we're going to? It's going to be a winter-summer situation. What? It's a winter-summer situation. Just go ahead.
things.
Gold, palladium, and what was
Thinking
the third?
Silver.
Silver.
Erraticity would be.
What do you think?
It's just high, right? So this has been a major correction week. Short-term
Okay, let's
correction,
go back to back here.
whether you're any cryptocurrency you're talking about, the short-term correlation to the Nasdaq is pretty high, right? So this has been a major correction week, momentum going down. So that makes sense to me. There seem to also be some stories on the more technical side.
Okay, so I don't really care so much what she has to say about Bitcoin there because she doesn't have the same information. She doesn't have the same information. Well, she doesn't have any particular insights in there that we can see elsewhere. So we'll actually go ahead and when we come back from break, we'll touch on Bitcoin a bit because it's the story I find the most interesting. But first, we'll take a word from our sponsors.
Looking for a prop firm that actually plays nice with automation? Meet Blue Sky, built for serious traders. And with TradersPost, it just clicks. You connect Blue Sky inside TradersPost, route your TradingView signals to paper or funded accounts, and let it auto-manage entries, stops, and targets. You control risk per trade, filter by session and symbol, and pause or resume with a single switch. Every fill is easy to review in one dashboard. Funded accounts can request payouts daily with launch plans starting at $49. Get funded with Blue Sky. Execute with TradersPost. Apply today at blusky.pro, blusky.pro, and plug in your edge. Trading involves risk. Use proper risk management.
All right, when it comes to Bitcoin here, all right, is it over, Peter? Is it over? I know we were talking about a few weeks ago this idea that the bull market for Bitcoin, the last two bull markets for Bitcoin lasted exactly 1,064 days, which is why for months I've been thinking about how October, the end of October, especially October 20th, would be the period where I'd be looking for the end of the bull market, right?
Mm-hmm.
But there was all kinds of other issues that the whole reason for the 3-year cycle, the 4-year cycle of Bitcoin, 3 years on, 1 year off, is because of the debt financing cycle, the liquidity cycle. And that got all fakakta because of COVID and higher interest rates and the whole thing. So the expectation is that it won't work exactly the way that it did before, and that we actually elongated the cycle, that it would actually be a 5-year cycle now, maybe 1 more year of up, and then after that, a down. So now Bitcoin has fallen down to this red line over here, which is the yearly average, the yearly volume weighted moving average for Bitcoin. And to me, that is the line in the sand when it comes to Bitcoin. Whenever I take a look at Bitcoin, it's when we fall below that level and confirm below that level is when we're in a bear market. And when we are cross above it is when we are in a bull market. Now, every single time we have gotten to this line, I know I don't even need to look at the chart, because I get calls from everybody going, "Is this the end for Bitcoin?" And that generally to me means we've bottomed. Right? I had that over here at 74, 75 on Bitcoin. Had it over here twice actually, and even earlier on in this cycle, I don't know if you remember, Peter, but this earlier on in the cycle over here, after there's a little bit of bounce up. Remember, there was after a year down and then a little bit of up. People were like, "Okay, it's over, it's going to fall," and nope, we always bounce from there. So my rule is I don't call bear markets early. There's no point, because markets will go up infinitely, and if they go down, who cares? They go down just for a little bit. So to me, right around where we are right now, all the way down to, let's say, 93 on futures for Bitcoin, give it 92,000. I'm bullish. In fact, I could be more bullish. If I'm going to go long, it's here I'm going to go long. If I'm going to take leverage futures, I'll do that. If I want to take option plays for calls for the upside, that's what I would do. It's around these points that it's always just perfect time to buy, and then people go. They don't see the rocket up afterwards. Bitcoin goes up 100% from there, and people go, "Oh, I should have bought earlier on." So I buy in these levels. But if we break below this level and confirm underneath here, then to me, it's a bear market, and I am looking to short all the way down to around $52,000 on Bitcoin.
Shut the front door.
Yeah, I just don't see any reason to call it early. There's no reason. because exactly at the point where it feels like it could not sell off even more is either the price you need to buy or you're looking for short. So I'll
Well,
take the
that's
bet
very helpful.
with the highest risk reward. What?
That's very helpful. Right at the price where everybody's the most scared and worried, that's either the moment where you buy and go long or you short. I mean,
Excuse me. Do you know when people call me to ask me if they should buy Bitcoin? Let me guess. It's 3 words. Can you figure it out?
no.
All-time highs.
Yeah.
That's when I get calls to buy Bitcoin.
Right.
That's when people call me to buy Bitcoin.
But they're calling you now, no?
They're calling me now to go, should I just sell everything?
Oh.
Right? So what happens at all-time highs or near all-time highs is that people go, well, it's up, so I'll just buy it now and buy it high and sell higher. I go, that's literally the opposite of what you're supposed to be doing. That's literally the opposite. So they miss the big run up. They go, well, it run up 100%. I should buy now. That means it's good. Because it just ran up 100%, it means now it's a good time for me to buy it.
That's right.
Because it proved itself.
Okay, so this is like Bitcoin right now. This is Bitcoin's Black Friday discount.
Exactly. Because what happens is that when people buy like 120, 125, and then it starts to fall, they go, well, should I sell it because it's falling? I go, well, if you bought it at now what I'm talking about, then you would just have a short stop. You'd only have to suffer the pain from, let's say, 94, 95 to 92, 91, and then you would sell it off. Now you have to write it all the way down from 120 down to over here, and now you have to decide whether you're going to sell or not. Buy it here. Not financial advice, do your own research. But if you like to buy high and sell higher.
I didn't hear that last part, but buy it here. That's what you said. I didn't hear the second part of what you said.
Yeah, I would buy if I'm going to buy
No,
Bitcoin.
I'm saying they're not financial advice. Never mind. Okay, cool. So optimistic. You said you couldn't be more bullish.
Yes, if I'm going to take a bullish play, if I'm looking for a perfect setup for a bull market bounce, then I want to buy it when the knife is freaking straight falling. I want that knife going Mach 5. I catch that knife, that falling knife out of the air. That's the perfect time to do it. If you're going to do it at all. At all-time highs, I never feel like buying. But as you've mentioned, Peter, I've been fixed. Once you lose a lot of money in the markets, you start realizing, oh, I have to do the opposite of what it feels like.
Just Constanza, the whole thing. All right, that's cool.
Warren Buffett and buy when there's blood in the streets or whatever, and they go blood in the streets and go, I got to get out of here. No, excuse me, buy when there's blood in the streets.
So what's the level that you said if it crosses, then you're like, oh, okay, party's over? Well, I mean, the party's not over. You can make money on the way down, but
on the index, it'll be, let's go Bitcoin index. It would be, give me 1 second here. It'll be an approximation.
You're gonna gum up your charts with all the colors.
It had to fall basically below 91.6 right now and confirm there. So it can't just wick down there. Oh, it crossed 91.6. Tom said 91.6. No, it's going to get down there and confirm, usually by retracing back up to 91.6 at some point and then rolling back over. So that's what I'd be looking at to confirm a bear market.
All right. Well, okay. I mean, not quite as red wedding as I thought. Jerome Powell, the Fed, are they really not going to be cutting in December?
Peter, they might not.
I mean, does he hate America?
I just clearly. What I don't understand is that he came out on September 17th basically saying we're going to be cutting now.
Yeah.
And I'm like, we're going to pause.
Has the market priced it in?
Is intention. And I'm like, I don't understand. The whole reason when everyone asks you, why are you only cutting 25 basis points if you think the situation is so dire? We are 1 million jobs less than what you thought we were. We're 1 million jobs less because your reporting is terrible. You should have cut 8 months ago. He said, don't worry, baby birds. It's because the market is already pricing in. It's forward guidance. So we cut 25 basis points. We telegraph it out. The market does the rest. Well, the market did do the rest. And trader Jerome Powell came back and said, hey, you know what? 1 minute. I don't know why you're so over your skis. Who told you to price in 25 basis point cut in December? Who told you to price that in? You did.
So what happens if they don't cut?
Well, Jerome Powell's replacement will. But we're going to have to suffer some pain until May. All right?
May?
Yeah, May is when the new guy comes in.
Doesn't the president have power?
Peter, I know you want to open the door here. You're in your Unabomber jacket. You want to open the door here to deep state talk. You want to open the door to the president is there for 4 years, 8 years max. If it's Donald Trump, sometimes 12 years. All right, they come and go. So don't talk to me about the president having power.
All right. Okay. Well,
we'll see.
Everything seems a little confusing. I'll just tell you, it's like I woke up, I checked the weather, and it says minus 50 one day, and then it says plus 50 the other day, and I'm like, but we don't even get 50 here. Like what? By the way, I'm talking about Celsius, Americans. I'm talking about Celsius. Like we don't get those temperatures here. So why are we experiencing these temperatures? Why are we so afraid? Everything's just confusing.
The drop in Bitcoin is nothing. It's not even 30%. 30% drops in Bitcoin happen in bull markets all the time.
You say 50% in order for the bear market to be in sight.
Yeah, generally speaking, 50% for the bear market. That's one of the signs. We didn't have any euphoria. Massive shorts on the leverage side, not the longs. So I'm looking for a bounce and a short cover here. I mean, what are the odds that 20 billion shorts or whatever, 15 billion shorts are right? And they're just going to roll it down to 50,000 and that was a good short. I don't think so. And then we have all the money in the Treasury General account. Quantitative easing is going to come. And if something breaks in the markets, we know what the Fed and the administration is going to do, up and to the right. All-time highs will continue until morale improves. So I'm not really worried. Always long, sometimes short. All right, Peter, that's it for me today. Is there any other concerns that you have? And the bets you want to place? You want to get into prop firms, I know. Prop firm trading.
Look, I'm just going to be putting on some trades. And then, I'll do prop firms once I figure out the buttons, like Austin Silver says. You just figure out the buttons. Just learn it like a video game. That's what I'm going to be doing. I've already created my bots. And but before I set my bots loose on real money, I want to do what Mike says, pay some tuition to the markets. Now, my tuition, I'm not planning for it to be as high as y'all's tuition, all right? Okay, I got Blackstone griddles to pay for, but I gotta feel some pain. I want to be of benefit to the community, and I gotta understand the pain. I still don't get the whole like, I can't help but trade thing. Like I still don't get that. I don't understand how I'm going to get there, but there's something broken in you traders. So I got to learn what that is so that I can help.
Watch Peter on Price Action Live and an episode coming to you soon. Either watch him succeed or, as I enjoy, watching him eat his own words. Great. That's great. All right, Peter, that's it for us. We'll be back next Friday for more after hours at 4 p.m. Eastern Standard Time. But please come join us Tuesdays to Fridays at 9:30 a.m. Eastern Standard Time, trading with the most advanced trade execution engine known to man, TradersPost, on Price Action Live. It's a fun time. It's a great time and sets you up in the right mood. We'll be back on Tuesday for office hours, where we go over markets in general. Actually, Peter, you're the new host of Office Hours, going over the testimonials and upgrades and feature requests that people have for TradersPost. And then, of course, Blueprint on Thursdays, where we create tools in order to make you a better trader, or at least trade differently. Whether it's better, who knows? All right, guys, it's been fun. I wish you, as always, happy trading.